even on the low side these days, I mean, you're talking $500,000 towards $1 million transaction. For most clients, I would think a couple of $1,000s to get a bit of financial modeling and be able to make the right choice. It's amazing how many people commit to that decision to spend that much money, outlay the capital for a big purchase without quite knowing what it's going to look like once it's done. They'll just like, we'll get the loan, we'll get the repayments come through and kind of figure out, are we better off or not? And some clients, it takes them a couple of years and they realize like, I bought this asset, but I feel like I'm going back.
Another podcast, Paul.
How you doing? Yeah, good morning, guys. Thanks for having me on today.
No worries. Figured I'd have you on since Paul, me and you used to work together at the same place, and now you've gone out on your own and have sort of started your own financial planning business. So I thought it'd be a great opportunity to have you on, hear more about like the work that you do and everything like that, and I can kind of come at it from the perspective of from the accounting background, understanding parts of what you do, and Val can sort of ask a lot of questions without having a lot of in-depth understanding of the planning. So I think you'd be a great sort of person to sort of represent what a person that doesn't know a lot about the industry would probably have similar sort of questions to what Val will have. So, yeah.
No, that sounds great. And it's one of the lessons I learned very early on was to try and never forget what it's like to be the customer or that person sitting across from you who has little experience, no experience or little experience of what they're sort of about to experience or what they're coming in for. It's not easy to sort of share your life story and then open up to a stranger about it. So yeah.
Yeah, fair. How did it all start? Like, why financial planning for you?
Well, for me, it was a little bit accidental, but then it didn't take long before it was an intentional decision to stay in the industry. So when I finished university, like most young people out there, I was looking for work. I did a degree in commerce and finance, and I had at that stage, as a young man, imagined a high life living in New York or working for a big investment bank or hedge fund, living the life and that sort of thing. But I quickly realized after I got my first opportunity, which was for a small firm in Southport, coincidentally, not that long ago when you could still walk in and hand in your resume and manage to get an interview that way. I do think those days have changed a little bit now. But fortunately, I got my opportunity to work in a financial planning firm there and apply some of the knowledge and skills that I learned about how markets and investments and those sort of things work, but on a much more personal and what I found to be meaningful level. Rather than working, for faceless investors and big institutions, I realized how valuable being able to impart some of that knowledge on to everyday people just trying to better their lives and do things that were important to them.
Yeah, right. Oh, yeah, that sounds really good. I guess in terms of the personal aspect, you were saying, like, how did it actually personally help you? Is it like the lessons that you learned, kind of you applied it to your own self and then um, got like a great benefit out of it, kind of thing? You know what I mean?
No, I think I understand what you're getting at. And I think that's a big part of it is being able to sort of put yourself in the other person's shoes, understand what's important to them, and not to draw assumptions or make assumptions about what's important to them. Because one thing I have learned is that people's goals, once you can really get down to it, aren't all the same. We don't all want the same thing. Financial security doesn't mean the same thing to every person. For some people, it's about how much savings they might end up with the bank one day. For others, it's about owning their home. And obviously, for others, it's about being able to do, experiences in life earlier. They're more comfortable to prioritize, lifestyle factors, be able to work less or spend more time with family. Others are more willing to make trade-offs, to have, less less travel or less today for more tomorrow. And it's about being able to understand the person and find the balance that fits them. If that makes sense.
Yeah. I suppose, like, just in a very broad sense, like, I think there's a lot of misinformation or lack of understanding of, like, what is financial planning. So, like, from that, from my, I suppose, very generalized quick takeaway is that it would be basically help planning your finances or your where things are going, and I suppose what goals and objectives you want to achieve.
I think that's a really good thing to address. I think misconceptions and sometimes even the wrong connotations about financial planning are out there, and some of it is a little bit deserved by the industry over practices, that went around for many years. Although there has been a big shift. Part of that stemmed from the Royal Commission, but I'd like to break down sort of financial planning sort of covers the main, I guess, 3 or 4 main aspects. So the first one is basically about protection. So that might cover what most people know, like insurance. Make sure that you have life insurance, that your loved ones and family are looked after. 2, it's about the financial management side. So that's looking at people's budgeting and cash flow, and not just as an advisor telling people they can't spend money, but really what I've found, it's about helping people prioritize what's important to them. So if it is important for them to be able to to go out for dinners once a week or once a month, we can find that in the budget, but find other areas that we can cut back. Investments is a big part, but more so in the sense of we help people find the professionals or the fund managers who can provide a solution that fits within that person's plan. So one thing that a lot of people don't quite understand is when they see a financial advisor, they expect you to, look at the stock market or trade shares for them, make those sort of day-to-day investment decisions. What a good advisor, I believe, can do is understand what is important, what's coming up in that person's life. So we know, how many years they plan to work, how long they have that money to sit in the market, when they might need to start drawing it down. Fund managers and those people at this level, they don't know who their investors are. They don't know what those people's plans are. And that's why there is a really important, midpoint, or almost like a gatekeeper between that big, and sometimes scary financial investment world and your individual clients or customers looking to try and grow and protect their savings.
Yeah, right. Because, like, when before I started, working with you and things like that, I suppose my perception of what a financial planner or advisor was is that it was somebody that essentially more looked after your investments and shares or real estate and things like that, and less, I suppose, did I understand that it's probably more about the planning and really assessing what's the 5 to 10 year plan here and how are you going to achieve that. So yeah, that's
You're sort of more like a coach, or almost with a fitness analogy, like a personal trainer. Like, you help people come up with strategies that are going to work for them, and that might be with savings. You look at different ways they can structure their bank accounts. For some people, it's having 10 different savings accounts and putting money into different categories. For others, it's about trying to help them manage their credit cards. So they might be putting expenses through it, but planning so they're not getting behind, not paying interest. Because I guess you can compare it. If someone goes to the gym and they just go by themselves, they get an idea or a once-off consult with someone who gives them some exercises to do, it's going to be, I think, the likelihood of them being successful completely on their own is vastly different to someone who has a support, even if it's just someone who can be there to go along with them each time or to keep them accountable. I think that's kind of where the financial planner can really step up and step in. And I think the other big misconception is that as an advisor, you need to have, there's no point being an advisor unless you have lots of money to invest, or you've received an inheritance, or you've got lots of savings. I think the opposite really should be true. And it may not be true for all advisors out there, because some may not, look for that kind of work. But I think an advisor should be someone that you can go to almost no matter what your situation is and look for ways you can improve. and it should be able to be scaled to kind of suit the needs of that person, because as I said, it's not going to be the same for all.
Yeah, no, and I think that's a good point, because like my perception is like, and I suppose it's the question of like, you don't know how much it's going to cost. There's this vague idea that it's going to cost a lot of money, but you don't know, and it's like, who's really the right person to come see you? Like, is that a person that's about to retire, or is it really somebody in their 30s that's making good money, or somebody that's maybe even younger than that and really behind? Like, where's the, I suppose, the right fit of person that's sort of would most benefit, I suppose, from your services, if there is a profile?
So I'm most passionate about people helping people kind of going through the stage of life that I am now. So they may be starting a family, getting married, just kind of through their 20s, because at that point, I feel like you've got to focus on your career, kind of where you want to sort of be in life. You build up to sort of more slightly senior sort of position in your career. So it does help you get to that point where you can start to have some savings capacity. And also it starts to become more important to have plans and priorities of what you kind of want to do, especially when you've got a partner. I think it really helps to be able to be on the same page as a team, and having a third person who's objective and wants the best for you both can really help, I think, a family get on the right track. And that's what I believe is super important. And I think the other big sort of misconception is that sometimes financial planning becomes like a luxury cost to sort of have. And what a lot of people sort of miss from that point of view is that it'll often cost people much more in life not to get advice, the cost of not paying that. And I'm trying to leverage technology as much as I can in my business to be able to cover that spectrum from people just trying to get their first sort of more maybe simpler type of plan, where I can cover off on different areas, but they might not need every piece of that puzzle right now. So you can kind of package something that will get people, to that next step where they can do more, and where it is affordable and they can get immediate value from it. And obviously for retirees, there can be, it's a different type of service, a different kind of advice. And there's typically a lot of immediate benefit for them to get financial planning. Whereas for young people, getting that advice earlier might not give you the instant payoff, but the long-term benefit where you've got years and years to build on that will really add up.
I think that's a good point you raised, because a lot of times, and it's just how we perceive things, is like we think of the cost of like your service, for example, is it costs X, but no one really thinks, I suppose, of the opportunity cost that's not like that you're actually spending by not seeing somebody and, I suppose, having that conversation. So like what does an initial consult sort of look like? Is there sort of fees involved for that, or in you sort of assessing what might be the right fit for a person?
The best way I've found to balance being able to help as many people as possible and be able to obviously run a viable business is to essentially open that initial consult or discussion to essentially anyone who's interested. So what I typically do, if we have an inquiry or someone, word of mouth might have recommended, oh, you should speak to Paul about this, is usually I'll do an introduction over the phone or a Zoom or a Teams call, just to be able to kind of find a bit more about that. And if I do feel like there's some issues we really should discuss, I'll invite them into, for a half hour, an hour consult, which still has no obligation or cost to continue. But I find that initial 5 or 10 minute discussion helps people understand what benefits there might be for that discussion, or if I'm even the right person to talk to. Because I think aside from just the confusion around what financial advice is, a lot of people, I think, tend to put under the one banner anything related to tax or money. And sometimes just speaking to me can be a good hub point to realize, what they actually need is a broker. Oops.
All right, everybody. Sorry for the technical difficulties.
There was no technical difficulties. We just had a short break. All good.
Yeah.
Back refreshed, ready to go.
So Paul, I really wanted to sort of jump into, you now starting up the business and everything like that. It's like, how long have you been out on your own now, and what's that sort of look like?
Well, that's a good question. Yes, it's happened quite quite recently. So I finished up with a firm that I was working with for many years last year, and I've launched this new business this year, which is SB Advice. It is a joint venture of sorts with an accounting practice, which I found to be a really beneficial source to kind of be able to work hand in hand with. As you and I work together, accountants and financial advisors can really be a great partnership, especially when there's a lot of collaboration involved. And that's what I'm aiming to do in my current business as well.
How did you get that partnership going?
One of the most important things I think when you're trying to start out in your career is through networking, and it just happened to be that someone that I kind of became friends with for many years through a Gold Coast Chamber of Commerce and different sort of, I guess, networking events in that space, ended up taking over, or becoming a partner in the accounting firm that he'd worked in for many years. And then obviously we had that connection, and they were looking to bring in financial advice and thought that I'd be the right fit. So we've set up a new business, which I'm running, doing all the day-to-day operation for, and they're trying to help support through referrals and that type of thing.
Yeah, awesome. Do you have like a location, or is it sort of home-based, or how's it sort of work?
Yeah, so I am renting an office space in the building, so I get to work actually close by with the accountant. So we're in Clear Island waters, which is kind of in that southern pocket of the Gold Coast. It's a nice spot. Yeah.
Awesome.
Very nice. I guess as someone who doesn't really understand financial planning. Let's say I come to you as a client. I got referred from a friend of mine. What would be the first steps for me? I guess
So what I like to
go
try
about-
and do,
yeah.
in the first meeting, I will give it a bit of an explanation of the types of areas that we cover. So basically looking at what's important to the person, really getting to know the person in front of you is the key thing. So finding out what they want to do. Do they want to, get an investment property? Do they need to, buy a bigger house for their family? What are their plans career-wise? Are they looking to progress up within the company they work for? Do they want to look at starting a business? And then we can start to drill down to the different strategies available. So they can vary a lot. So for some clients that I've got in my same age group as myself, some of the strategies have included getting an investment account set up that they can put money in each week or each month to slowly start building up, because compound interest is such a powerful thing, and having 10, 20 years of that time for that to build up is just such a huge opportunity. Yeah. And we look at when they might need access to that money. If they've got that account there, it becomes a rainy day fund, but also a source of growth, something that they can retain access to. And then we look at ways, often hand in hand with the accountants, to do it the most tax effective way, through ownership, through, as I said, different structures sometimes, whether it's trust and that sort of thing. So we can kind of work out what suits best on that front.
Right. How often do you work with the client, I guess, to figure that out? Like, is it like a everyday kind of thing each week? Like, let's say I talk to
That's
you
a great
about,
question.
yeah.
So typically for most people, they'll come in, we might have a discussion on the phone, 10 minutes, just as a quick get to know each other, make sure the person feels comfortable to come and meet with me, that they sort of think, oh yes, I could trust this person, or I feel like, I'm comfortable to come in for that next meeting. So that next meeting still doesn't put any pressure on that person to commit to fees, or that they're going to choose to engage with services, but it just gives us a few talking points to start with. So I find it helps both of us to come a little bit more prepared for that next meeting, which might typically be an hour. And that's when we have a few agenda items we can focus on. So I might know that they're looking at upgrading their house in a couple of years. They're looking at going out and starting a business, and we can kind of start to look at a few different priorities that we can sort of help with. So that meeting might take, as I said, an hour and a half. What I'll typically do after that is take away our discussion and information that I might have collected, which broadly might include incomes they've got, any loans or liabilities, a bit of a, I guess, snapshot of their current position. as well as the things that they want to be able to do over the next few years. So that might be broken up into, short term, medium term, and, longer term, which might be 7 to 10 years plus. And then I'll come back with a bit of an outline, which basically says, for your short-term plans, we could look at, as I said, a debt reduction strategy, or I might even include other professionals in it, saying, well, I think if our plan is to try and get a new house in this time or buy an investment property, we should involve a mortgage broker who can help us save some interest rates. It's really about bringing in the right people as well as giving a few tips of where I think I can add value. So whether that's finding out the where they're putting their money now, or what they're doing. This is often the most useful way, especially for younger people. I like to ask, when your pay comes in each week, like what happens next? Do you just kind of let that come in, and then do you just kind of wing it through the week? Do you
maybe
do you if you have a partner, do you put it some to a joint account together, or those sort of questions I find are really interesting, especially when you've got goals that you both want to achieve together. It often starts at like the most basic level, and I'll basically give a bit of an outline of the things I think we should target. So it might be budgeting, it might be an investment plan, or debt reduction, how we can help get that under control.
Yeah.
Sadly, I do meet with a few clients in this same age group, and you realize they've made a few sort of missteps in their younger years with credit cards and personal loans, but it doesn't mean that obviously they have to be criticized for that. It's a learning curve for a lot of people.
Absolutely, yeah.
Our schools often don't do it. They treat it as not their responsibility to educate people around that. So that's where we try to step in.
Interesting. Back to I guess mortgage broking and stuff. Let's say I came to you, you gave me the advice, or you, I guess, not say necessarily gave me the advice, but let's say I wanted an investment property, and you're kind of like, oh yeah, it's actually kind of possible. Would it be? And I go on my own, and I go to a bank and I say, hey, I kind of want a loan. Is that kind of the right step, or is it better to go through you because of whatever reason?
So what I help people do, because it's a very common, I think, aim or goal for a lot of Australian families, is to grow their wealth, especially, maybe not at quite a retirement stage, but at that accumulation sort of phase through their 30s and 40s to acquire property. It's considered a fairly stable and secure asset to hold money in. So what I help people with is the financial modelling aspect of it. So I don't get involved to the point of recommending specific properties for people to buy. I might generally be able to give some commentary around, the price points in different areas and try to help people narrow their search. But ultimately, that'll be up to the client to decide, what property fits them. But I can help them look at their plans. So I'll know what their other goals are, what their, cash flow surplus is, and I can use our detailed software that is fairly complex to use, but it can break down what their position is going to look like if they make that commitment. So it'll factor the tax deductions, and all of that gets sort of bottomed down, so we can see projections over 5-10 years. What's it going to look like if we make that decision to buy that property? And we can also put in scenarios which can be extremely useful for people to make an informed choice. What if interest rates increase? How does that affect our situation? What if rents decrease, or we have a vacancy period for a few months? I mean, it doesn't seem likely in the short term that being a problem, but it always can be. It's been a problem for clients in the past. And what's the potential risks, as I said?
I think these days, like, that's more important than ever with the housing market the way that it is here in Australia. Like, it's everything is just so overpriced. So like, if a young couple came to you on 200, 300k collectively, and they just want to get into the property market to really buy their first house, is that something like you'd be able to assist with the strategy behind working out those sort of details with them?
I think, yeah, as I said, my job could be invaluable for that. I mean, firstly, you just said the same thing too with the value. It's a huge value transaction. Like buying an investment property, even on the low side these days, I mean, you're talking $500,000 towards $1 million transaction. For most clients, I would think a couple of $1,000s to get a bit of financial modeling and be able to make the right choice. It's amazing how many people commit to that decision to spend that much money, outlay the capital for a big purchase without quite knowing what it's going to look like once it's done. They'll just like, we'll get the loan, we'll get the repayments come through and kind of figure out, are we better off or not? And some clients, it takes them a couple of years and they realize like, I bought this asset, but I feel like I'm going backwards. Well, what's happened? Like I expected by investing money, I was going to make money. And that may be true in the long term, but that's, as I said, where the advice can come in. Because sometimes, sometimes that decision can end up being unattainable. Or we can look at, what happens if income changes or one person, loses their job or something. You can look at what those scenarios are, and you can avoid people making costly, not so much mistakes, but having to pay costly lessons. As I said, I've met clients who have made that decision, and without the knowledge up front or in hand, it's been a very costly process to exit out. Even the taxes that you pay to buy the property are tens of thousands of dollars alone.
No, I think these days that's more important than ever, and especially like with interest rates, no idea what's going to happen next. I think that strategy, sitting down with you and working that out, or what if it does go up another 2%? Like, well, what would it look like if one of the people in the relationship lost their job? Like, how's that going to affect the repayments and everything like that? So no, I think that'd be pretty invaluable service, really.
Definitely. Does your strategy also include like cryptocurrency? Like, how diverse would this strategy go? Like your strategy towards someone? Would you prioritize crypto for a young person or an older person, if that's in your?
It's a really interesting question to bring up cryptocurrency. I know it's been around, I guess, over a decade now. From a professional standpoint, it's still not an asset class we can directly recommend, but that doesn't say that my clients don't hold it. What we basically do is look at a bit of a risk profile for what they need, and we have a category which is basically alternatives, so things outside of cash, bonds, shares, and those sort of property, the more typical asset classes. And that alternatives is becoming a more important part these days, especially as the economies around the world are becoming more interlinked. We are having more of a problem where shares and between different countries don't provide the diversification, where basically meaning that if the Australian market goes up or the US market goes up, they typically are moving closer and closer together. If we see the day before, given the time difference that the US market's dropped, you can almost guarantee that the Australian market's going to open lower, which shouldn't happen and never used to happen not that long ago, but these days it's happening more and more. So there is a big push in the industry to try and be able to treat crypto as a legitimate asset class that can be recommended. And I think the push of more mainstream funds and things called ETFs, which you can buy on the stock exchange, is going to really help with more everyday clients be able to be comfortable and have a more accessible way to have exposure to it.
I do know in the US that the SEC, I think, approved a lot of the Bitcoin and other sort of mainstream crypto ETFs more recently. So I think, probably in the future we'll see more of that here in Australia. So I think it wasn't too long ago that they approved a few ETFs here in Australia. Could be talking out of turn, but
not quite sure either on that, if it's actually been approved or available yet, but we certainly wouldn't be far away, I don't imagine.
So Paul, give us an example of some clients that you've helped out before.
So one story that really comes to mind, and this lady was super grateful to me many times, and basically said that she can't imagine what she would have done if she didn't have that opportunity. Lucky for us to be introduced and to be able to meet. So her and her husband, a typical salt of the earth, down to the ground Aussie. I don't want to use the word battlers because they weren't struggling that much, but basically she was in her 60s and had to retire a little bit earlier due to some health concerns, and her husband was working in the mine, so flying in and out, even to his sort of early 60s. And obviously that work became harder over time. And they'd had some difficulties due to, unfortunately, to health concerns with their children and grandchildren they'd supported a lot, which meant they drew down a bit of their super earlier in life to be able to help out family, which, as you know, sometimes is, well, it's the most important thing, so it's totally understandable why they did that. But obviously that put their situation for retirement a little bit below where they might have expected to be. So what I was able to try and do is make some changes, use some clever contribution strategies where, because she wasn't working due to health, we would, draw some super out, be able to make bigger contributions to his super, because he was earning a higher income in the mines, which we tried to allow to continue for a couple of years, as much as we could to replace that. But because he was on a higher income tax, that gave some big tax deductions that we could then claim and help to sort of replace some of their super. Without going into too much detail how that worked, basically helped them get some refunds of $15,000 to $20,000 extra, which is completely legal, completely fine what they did. But as everyday Australians without a lot of financial background, to them it seemed like some sort of miracle work. Like they just couldn't believe that this was possible, and not only possible, but completely acceptable, within the rules and the framework. But it's not something they ever would have contemplated or even considered to be able to do themselves. And it just shows like the rules are out there. They're written pretty plain and clear for the most part, but most people just won't have the time or even that know-how or initiative to try and look at how it's written and realize, if I follow that this way, we can do this. So I said, she was retired, she was over 60, she couldn't work anymore due to health. She had a bit of super there, but it wasn't going to be able to do a huge amount on its own. And because she wasn't working, there wasn't more money going in. And that's why as I said, we could use some of that money allocated to him to get some bigger contributions. That money also helped them to make some extra loan repayments to clear some of the remaining home loan. And within a couple of years, we had the home loan repaid. They still had a modest super balance, certainly not where they probably hoped it might have been, but enough that it could give them an extra $10,000 or $15,000 a year income. And when they got the pension, which I helped them through, I went into Centrelink with them, which really made that process, I think, easier. It's not something maybe every advisor would do, and it's not, but it was something that was, I guess, just unexpected from their point of view and made it a lot easier for them. And now, once they'd retired, had the pension coming in plus that little bit of super, as I said, for them, within 3 to 4 years, it turned things around a lot more than they would have expected.
Yeah, I think because super in general is not something a lot of people think about, because I suppose we're just taught that it's not something you're going to be touching until you're 60 years old, so a lot of people just write it off. And I think it's a very important point that you raised, that there are these amazing sort of tax deductions that exist for you to contribute to your super fund, because they're written in such a way because the government wants you to put that money into super, right? And I think a lot of times people do write it off because you're not going to be able to access it for so long, and people don't really think about it. But I think what you've touched on is very important. Like I've had a lot of clients that I've referred to you that have been able to use these sort of strategies to take advantage of the rules as they exist, and when close to that age where you actually are able to take it out, like it just provides so much benefits that a lot of people wouldn't even think about. Exactly
right, yeah. So, as I said, them not having the advice would have cost them, as I said, I don't even want to add it up, but it would have been a vastly different scenario if they just done what they probably would have done ordinarily without advice. She would have left her $60,000 sitting in her industry fund, which might have built incrementally a little bit on its own. Yeah. And he would have worked and just had his employer money go in. They would have paid his full tax rate, which you do once you're earning $140,000. That tax is significant. I'm not sure off the top of my head. Maybe it's $30,000 or $40,000 a year.
The rate's changing, but above 120, basically paying 39 cents on the dollar.
the
Just a bit,
idea of being
just a
able to
bit.
get that big refund to help with a combination of helping clear some of that remaining home loan and being able to keep some more money in super, just, yeah, as I said, for them it seemed almost miraculous result. But to someone like myself who does this sort of thing day in, day out, it was almost common sense sort of thing to do. But it just shows that difference.
I think it's important you hit on the fact that you're able to achieve using the age pension, because I suppose a lot of people think, like at least I did before I started working with you and things like that, that you only have a financial planner if you have a lot of money, right? The idea of the age pension wouldn't even really apply to the type of person in my head that would be seeking that advice. But really what you're saying is, you don't have to be super wealthy to see a planner. You can get a lot of benefit pretty much at any stage that you're at, and the pension can sort of formulate part of the strategy, you'd say, almost with that.
That's exactly right. I think those between that gap between getting some of the pension and all of the pension, obviously for those, if you're applying for the pension and you don't have any other savings to your name, unfortunately, there's probably not a lot of assistance that an advisor can do other than maybe help you through that Centrelink application process. But for the others, which does make up the majority of those entering retirement these days, yeah, there's enormous benefits from it. And just understanding how that process works, how your assets are assessed, can make you be able to sort of move money to certain places to make sure you get the right entitlement.
If I'm correct, basically your principal place of residence, like where you live, isn't counted as part of that Centrelink age pension test. Is that right?
That's correct, yeah.
So that could form a large part of the strategy, you'd say.
Well, that's it. And for some people, this is where we can have a real focus on the lifestyle aspect of planning, which is a big part of what I try to encourage. Is my purpose, I think the whole point of financial planning is to be able to help people live the life that they really want, or as close to that as possible. And so that doesn't just mean doing what's the absolute most tax effective or financial effective thing to do. It's balancing what does make sense financially with what is also in line with actually helping what's important to them. So yeah, being able to maximize the age pension, and one of those strategies might be, well, why not buy the apartment by the beach that they want to live in and put a bit more of their assets into their home, so it does allow them to get that part pension. Because it also, as I said, there's other benefits apart from the fortnightly income. There's other discounts and healthcare concessions that can really add up as well.
So how long have you been in being a planner, now recently going out on running your own business?
I I entered the industry in about 2012, and I've been licensed as an authorized financial advisor since 2015, and obviously made that next step at the beginning of 2024. So setting up the new business this year, which has been a big learning curve for me because I've spent many years now learning the profession, improving my skills and knowledge in different areas, but certainly the administration and aspects that go along with running a business have been a challenge, as well as being able to manage my time more efficiently as well.
100%. Like, I suppose it's almost been a year since I left and started the own business now, and I suppose we probably took a lot of the admin work that was done by other people for granted now. We sort of have to do it ourselves.
You can say that again. It struck me many times now where, where's my Sammy? Where's my Brian? When I get to that stage, I've got my meeting and I've got the documents ready. I'm like, oh, yep, I've got some more phone calls to make. But no, I do enjoy it. It's been also a good handle to get across all aspects of the process from start to finish again, because it's helped me identify areas where I should focus or use my time, as needed, and also the areas where I can try and find other solutions and alternatives. So I've made a lot more inquiries with new software and technology services that are out there that can kind of automate some of the processes that I've been doing, so that I'm not having to enter data into two places, so that I can have, once I've entered it somewhere once, it can automatically pre-fill into other areas, and basically try and create efficiencies where I can work out what I should, as I said, what I should focus my time on. I mean, we all have the same number of hours in the day, so.
So how have you sort of seen the profession change? And I suppose, starting in business these days, like what's the sort of, how's the industry changed over the years from when you first started to now?
I think it has become a lot more transparent for the most part, which I think is incredibly important. The number of clients that I've spoken to, even in recent years, who talk about their experience with advice in the past and how they could sort of walk away from a couple-hour meeting and they said the last time we got advice, they still had basically walked away more confused than when they went in. They didn't know what had changed. They didn't know how much they had spent, or what really had been achieved. And I think there was a little bit too much focus in the past, and not to try and criticize all advisors out there, but I do think there wasn't enough interest in helping clients make an informed choice and listen to what they actually wanted out of the process. As I said, one of the lessons I learned early was not to try and assume what you think people should want or what they do want, is to actually just make sure you ask them. And sometimes that means you have to ask them why more than once. If someone tells you that they want to buy an investment property or they want to have this much money in super, try and understand why, why you're doing that. Because as soon as you understand that, it's a lot easier for you to make the recommendations and that tie back to something specific. And that's what I always try to make sure, that when clients walk away from a meeting, they might not remember every little technical detail, and I never expect them to, but they should at a pretty high level be able to understand what the main strategies or recommendations were. If something was going to be set up a new account somewhere or a super fund move from A to B, that they kind of knew why we were doing it. And it wasn't just for my convenience or something. Because I do think there was an aspect in the industry where if clients came in, like, you would help them with their goals, but it was kind of my way, or you have to go talk to someone else. Like, this is what we do. We use this process, or we use this strategy, this provider. So you have to move. Like, if you want us to talk to you, if you want us to help you, you have to move everything to this place. And I think that's an area that is changing, and I certainly am not operating on that basis.
Yeah, no, that's great. Like, because it's sort of the same for me in the accounting profession. Like, a lot of the clients that I have taken on, they had no real understanding why things were being done a certain way, why the structure they're in was set up in the first place. And like, a big part of what I try to do is help them understand from a very broad, high overview why things are the way that they've been set up, how we can do things moving forward, or like why we're looking at setting up a certain structure. I really try to generalize, give that broad understanding. And a lot of the times, and I think with clients I've referred to in the past, like, they come away, oh, now I sort of understand why we're doing it this way. They don't need to understand all the nitty gritty of the things that we do, because it's not necessary. But we sort of provide that understanding to them as to why we're looking at doing the things that we do. So I feel like, 10, 20, 30 years ago, people in both our industries, they didn't really bother.
I think a lot of things were just done on that assumption or on their behalf, because that person thought, or at least believed, that that's going to be better for them, and it was just done. And I think that part is important to change. I think the how is something that we know, and that's where the experience, technical knowledge comes in. But I think, as I said, I always try to make sure my clients at least understand the why pretty well, because that's, you don't have to understand all the rules and legislation to understand the why you're doing it.
And who is your like typical customer or client? And do you see like a trend changing towards the younger generation as opposed to the older generation?
I've seen, both. Obviously, because we have an aging population and there's a lot of people entering that sort of 60 plus bracket. A lot of my recent, half dozen clients that I spoke to this year, most of them would be in that category. But the interesting thing is, a lot of those people are referring their children to me as well, who coincidentally are sort of my generation. And I found that really valuable to be able to pass on some of the knowledge to them. So a lot of those, that's where it's been quite exciting because, I might talk to the parents and they come in, they're like, we need to understand, like, I'm 60 now, I think I can access my super a bit, like, should I do that? Or, and then, my son or daughter, or, they just got married or they're just having having a baby. And, I think they should talk to you to find out a bit more about what they want to do, or they want to buy their first home. What are some of the things they could, should be doing? And there are things, as I said, for them. There's one scheme that I think is so underutilized, it's almost comical, which is the first time owner super scheme. It's been around for almost 5 years, I believe, maybe
really?
longer.
Wow.
And almost nobody has even heard of it. I think it has been used like a few thousand times in the country or something, like
never heard of
virtually, virtually non-existent, and it's been around for a long time.
Yeah.
And it really can help people save a significant amount of tax and, as I said, buy their first home. And they've made it more lenient, more accessible since then. But again, still really unknown.
Very interesting.
We could talk about what it does more, but as I say, I think the point is, I find that's been really helpful. And if you can really get that relationship, as I said, it's often starting with the parents, but I've had quite a lot that are like, my son would really want to talk to you, or he's got this amount he's managed to save up this much. Can you at least, talk to him and give him some options? As that might not involve a full financial plan right away, but it certainly builds that relationship, and it builds like that person then, has someone that, when they may be ready, or when this point, maybe it's 6 or 12 months, they know, I'm going to call Paul and, talk to him about this.
No, I think that's great because it's basically it's a no obligation. They can call, sort of ask you those questions. You can see sort of if you can help them, or it might not be now, it might be later down the track. I think that's a very invaluable service that you're providing there.
Do you think there's a lot of a younger generation still not really sure what a planner does, and maybe that's why they kind of like, do I need one? Do I not need one? And do you think there needs to be more of a push to show them what you do?
I think there does, because a lot of people still perceive it as an older money thing. Like when you've got, older in life, or you've got a lot of money, that's the only time you need an advisor. Like I said, I talk to all the younger accountants in the firm that I work with. Most of the staff are sort of that 20s, 30s sort of age. And it was a really interesting first introduction meeting to kind of get their feedback of, okay, what do you do? I mean, the obvious answer was, you help people invest in shares. And, beyond that, there wasn't a lot of other understanding. As I said, mostly it's around applying, as I said, strategies, which around, how to manage money more effectively, how to prioritize paying down debts. If you've got a few to get your handle on, as I said, I think there is such a wide spectrum of areas that advisors can help. But I did want to sort of, I guess, as a caveat, like holistic advice is not something which basically means that you help people from budgeting, from wealth protection, insurance, superannuation, self-managed super fund, investments, estate planning. Like there's a broad spectrum where advisors can help. There are still a lot of advisors out there who will just focus on one. Right. So that's where I think has created a little bit of confusion in the industry. Not all advisors are licensed or qualified to help with all areas. Some either don't have the qualifications, or some just simply choose to specialize or focus on one particular
I definitely have heard that, financial planners now have to go through the training, and you've gone through the training, and I'm sure you know people who haven't, and they're kind of forced to do that.
Yeah, it's an interesting time. The clock's ticking for quite a lot of people out there. I think we're down to something like 15,000 licensed advisors in the whole country. Wow. Which used to be like more than double that, I believe.
Oh my God.
And we've got 2 years before the final education reform things kick in, rules or requirements kick in,
Yeah.
where you had to basically have your degree equivalent. We had to have passed an ethics course, passed a ASIC exam. Virtually anyone who was licensed before 2021 had to do some extra education. It was essentially impossible to have met the requirements by default. Doesn't matter if you've been in the industry. In fact, being in the industry for a long time typically was worse because those people often didn't have the degree qualified. And
Exactly right.
so it
yeah.
made it even harder.
So you're seeing a large decline, essentially.
Big decline in the
advisors.
industry. The average age is still up there somewhere. It's well over 50, I believe, at the moment, which again sort of creates a bit of a longevity problem, especially for people kind of, even if they are sort of planning for retirement or getting to that stage in life, there's a big sort of chance that basically by the time they get to that 60 or 65 age, there's a good chance their advisor is going to basically be ready to retire at the same time, which means right when they might need them the most, there's a good chance that they might be stepping out of the industry, and that means they're sort of with someone unfamiliar. And I think that's been a big, what typically I think for a few years, I sort of saw as a bit of a detriment. Some clients kind of looked at you being younger as an advisor and like, can I really trust you to help, with my retirement or with this something so serious? Like, what do you even know? Like I feel like now, that was a bit different when I was 25 compared to 35, because I guess I am a little bit more mature now. But still, even then, someone who's in their 30s, you still don't have a lot of life experience by most people's standards. But I think, on the other side, they're thinking, well, at least I know my advisor, like, he's going to be there,
Be there for
like,
the
when I
whole time.
need him. He's not going to be ready to
You should
retire.
still be there in the next 10, 20,
Yeah.
30 years maybe, So,
Whereas, if they're advisors, the same age as them, that has to be a bit of a somewhat concern. And not that they should, obviously everyone deserves to be able to enjoy their life and retire. So obviously I know these clients wouldn't be holding it against them, but it would still be a concern that, well, this person that's helped us get this far, obviously they're going to.
Absolutely. If your advisor's 60 and, they might be retiring soon, you'd almost be concerned that their junior is going to come in that has no real experience and have to take over their file. So, with you at least...
Well, that has been a bit of a cause for clients to move in the past. A couple of the clients that have moved basically have been because their previous advisor retired and their new advisor said they felt like they had to start over their relationship from square one again. And when you've kind of had someone who's seen you go through all these different milestones and different things for 5-10 years, it's probably feels a little bit difficult from the client's perspective to be like, oh, you kind of have to just wipe the slate clean and start again. And so that does tend to cause people to maybe look elsewhere.
So it's very common to have a client for a very long time, right? Rather than I'll help you in the short term and then I'll have a massive break and then have
So for
another
younger,
gig.
so that's an interesting point that you mentioned on the sort of service model, I suppose. For a lot of the clients who are, I guess, approaching that more retirement stage of their life, it's much more typical that we will do what's called like a continual or regular review service. So those clients may obviously get a plan in place and then pay a monthly or annual cost or investment, depending which way you look at it, to keep having regular meetings so we can kind of track how they're progressing, look at how they're paying off debt, how their savings are growing. And they get a lot of benefit from following that because you can track, well, this is where we need to be, this is where we are now. And they can kind of see that, yes, we're on track, or no, we need to make some differences, or life events, as I said, change priorities a little bit.
Yeah.
For younger clients, some, depending on what their needs are, will do that. As I said, I've had some younger clients who are doing that regular review catch-ups. Usually they might be younger professional couples, so as I said, they've got a bit of that surplus income where they might be able to save $20,000-$30,000 a year between them or a bit more. So allocating a small amount of that to get that continual advice to review their investments and other options is worthwhile. For other younger clients, as I said, and this is a big part of me looking out for the future of the business, is I'll only recommend services or basically services for clients if I can truly demonstrate and believe that there's value for money in it. If it's going to cost them X, and I believe, they might have been, in a sense, if they, not better off, but not much better off by not paying that cost as well, then I'll sort of recommend let's do this initial plan. We can set these sort of structures or things up, and then rather than have that commitment to the ongoing cost, let's just, as I said, I can call you in 12 or 18 months, or you can call me if you've got any general questions, but we won't have a formal, as I said, ongoing or regular meeting process scheduled in. And if something comes up, as I said, they decide to sell the house or they decide to do something major or new job, business, we can just have that introduction meeting again and work out whether this this previous plan we did needs to be fundamentally changed, or whether it maybe still can be adapted. And I think that's how you kind of help to try and basically tailor the service level to suit the client best. And ultimately, as I said, if you can keep them happy, or where there's always value, they'll want to keep coming back, or they'll want to stay with you longer term.
Nice. Any more? Anything else?
Not really. You have anything else you want to talk about?
I think there were a few things, but as I said, it's more from, I guess, the challenge that I've had, as I said, still pretty recently, as you know, it's only been not even 3 months into new business, is trying to figure out each day, when do I sort of spend time to look at some of the, I guess, higher level business stuff, like marketing or website.
100%.
Or when or just focus on, I'm getting this file done.
No, that's a big thing, right? It's the question of how much time you spend working in the business versus working on the business, and it's a sort of definitely a balancing act of that. Like and speaking for myself, I've got a lot of work with the end of March deadlines for QBCC reporting and a lot of client work due in May. I'm spending a lot of time working in the business, not necessarily working on the business in terms of marketing, different things to look at. So it's absolutely a fine line of trying to work out how much time you dedicate to that. Some things that I've recently tried doing, which I think is proving successful, is you sort of dedicate time blocks to the working in the business sort of side of things, like an hour a day or something like that is something I'm sort of experimenting with at the moment, and trying to keep to that formula of doing that. But at the moment, I was sort of
trial and error.
Still trying to work
more
that
on the
side
trial.
out. Yes.
Yeah, that's the part that's proving challenging. It was, as I said, it was easy when I just started out because I didn't have a lot of like client work to be focused on. But as soon as I had a couple of weeks where I had a few meetings and a fair bit to follow up, I quickly realized how that time of the day gets eaten up. And obviously it's doing what I want to do, and I'm happy to be busy, and obviously I want to be growing. But as I said, that's the part that quickly gets kind of pushed aside, and I guess it's interesting to see how you kind of juggle that.
Yeah. And I'm curious to hear your take as well. Like as we sort of talked about, the average age of the financial planner is like 40 plus. It's the same sort of thing for accountants. There's not really a lot of people coming into the industry, I've found. I'm curious to hear if you're aware of many other financial planning businesses that have started up recently, or
I think there are. I mean, there are a number that are going out to start up. I've seen a couple that have popped up on the Gold Coast, and one thing I was trying to do when I started was, just look at some of the online presences, look at websites, and that one of the areas that I chose to work on to help save some costs was to just develop the website myself. But that's been an interesting sort of learning curve in itself to work out, which jobs are worth the money, especially when you're starting out and funds are somewhat limited, obviously. Which jobs are worth, me applying myself to be able to figure it out, or where the value is to hire professionals and that thing to help. But as I said, I've looked around for a couple and there are other advisors sort of in my sort of age group entering the industry. I do worry a bit about the future because they have made it, as I said, more difficult to enter. One of the biggest challenges I think is new advisors need to do basically like a year apprenticeship to enter the industry. It's called the professional year. And I do worry about that being a big barrier to entry, especially because those people have to find basically an advisor who's willing to commit that time to bring someone on, and they don't have the guarantee that that new person, might not be with them long term. And it's a pretty big upfront investment to basically hire someone who you would likely need to still pay a reasonable wage of some sort, who can't really produce revenue.
Yeah. Would you recommend people that maybe still in university and are considering becoming a financial planner / advisor? Is it something you'd recommend people still do these days, or?
I think despite all the challenges, it's an industry that can't ever fully be replaced, because it will always be a need for it, because at the end of the day, people like to be able to do business with people, and I find there are online services for advice that are trying to kind of go down that robo path, but I've never met a client who was happy to get their investments from like a chatbot or something like that, as a maybe for a small question or a small part of what they should possibly do in the short term. But for the big questions in life and having a bigger plan, I feel like that human interaction is so key. We're obviously losing advisor numbers in the last few years really rapidly. There's going to be a growing need for it. So I think obviously for young people wanting to come in, if you really want to be able to have a meaningful impact in people's lives, like, it's a great industry to be in, because you will experience the highs that people go through in life when they achieve milestones, then you help get them there. Obviously you do experience some of the lows with them as well, but having someone that they know supports them through it, as I said, it's empowering for yourself. It can be quite a surprise, and there's one thing that uni doesn't prepare you for, is you end up being almost a pseudo counselor in some respects. But yeah, as I said, I do think for people who, as I said, if you like being able to see the impact of your advice, and you build those and enjoy building relationships, like meaningful relationships, because you deal with very personal and serious issues for clients. It's not superficial conversations at all. Then, as I said, you'll really value and get a lot out of it, as much as you put in, I think.
Do you see AI? You were saying about chatbots, and I understand you could ask it questions, and it'll say, "Oh, yeah, you could potentially put your money in ETFs or something like that." Do you see AI being incorporated into your day to day, where it basically, assists you to make some deductive decisions on the path that you want to take, streamlining your processes?
Yeah, I've tried to do a bit of research, especially this year, into what sort of different aspects of AI can be used. I do think it's a great tool to be able to use, especially just to be able to leverage how much you can kind of engage with clients. Like, one of the powerful aspects I've seen is how you can kind of create a message or give people a market update, and the AI can help pull the data and be able to help you sort of basically communicate with your clients a lot easier across the board. So basically, and I don't want to take that away, is that you're not the clients are just getting sort of automated generic sort of communication. Like, you can still have the AI that can understand all the data and notes that you put in the system, so it can help you still communicate on a very specific level, which I'm learning. And as I said, it still then allows me to leverage my time more effectively. That's a big part of what I want the AI, the tools, technology to do, is not so much scale the business in one sense, but just allow me to be there more for clients. So to be able to use it. So I think it would be a naive thing to think of AI as purely going to, as a competitor or as a threat. I think the more you kind of resist it, the more you'll...
more parallel than
more of a collaborative.
Correct,
Just like we use computers and things, obviously, to make our jobs easier now these days, you can't do it without it. I think AI, in a similar fashion, is sort of a tool that we can sort of use to help support the work that we do. So it'll be interesting to see how things develop from here for sure with AI.
Definitely. Is there any specific tools that you kind of use that you've tried out that you've saw some success in?
One of the biggest ones is, and I've always been, I think, tried to be proactive as technology changes. One of the changes I made many years ago was from meetings. All advisors would agree with me here that file notes are one of the most onerous things that we have to do for every client meeting. You've got to document it in detail, including virtually every key thing you discussed after a meeting. And these, if you type them out, could take a good half hour, an hour, depending on how fast a typer you are.
Yeah.
So for years and years ago, I made the push to be able to try and dictate file notes, which was a learning curve, and it's actually harder than it sounds to do. Plus, software always wasn't great at picking up what you said.
Yeah.
Left some pretty hilarious results sometimes. But I stuck with it and persisted with it, and obviously the more I used it, the better it got over time. And what I've discovered now is some new tools that if you're doing a Teams or a video meeting, it can actually, like AI tools can basically summarize and effectively transcribe like the entire meeting. And as I said, file notes, as I say, anyone who's been a financial planner will know how annoying and tedious that aspect of the process can be, but it's so essential that it had to be done. But as I said, that's one tool that's really opened my eyes, because not only does it just transcribe a meeting, which if you had a file note for an hour and a half meeting and you transcribe the whole thing, it would just be an unwieldy sort of document that it wouldn't be very useful to try and come back, because it would take you a while to filter through to find all the key information. But what the AI does is not just transcribe it and who said what, but also create like a real meaningful summary
Like
of key
subject
points.
headings, key notes that you spoke
Which
about.
I can't quite work out how it knows what's important and what's not, but that's
Maybe
the
the
beauty
emphasis
of it.
of how you kind of responded, or maybe the question that was asked beforehand.
It
Could be
somehow
something like
seems to
that.
pick up pretty accurately, surprisingly accurate, really, what is
It's incredible.
Yeah, like similar to that, I've been using ChatGPT just after a phone call or a meeting I might have with a client. I'd simply just do a recap of the call or the meeting, basically talk just on my phone with a ChatGPT there, talk about the meeting recap, all the sort of summary points and everything like that, and then the ChatGPT, after I've finished talking, does a full transcript of everything that I've just said. It's give me a summary of the most important parts that I suppose the AI has found from what I was talking about, and even gives me like the action steps of what's next. So I found it to be incredibly powerful in
similar
time
kind of
savings,
stuff.
because it'd be the same situation for myself where I would be spending 15, maybe half an hour having to type up a recap of a meeting or a phone call that I've just had, and now that time's just saved. But I think another part is we still have to be cognizant and aware that these things are still in development, because I kind of have a file where it's just all my meeting notes and call notes and
In one chat.
in the one chat, and you can click search. Show me the meeting notes from this phone call with Bob I've just had, and it can produce that. And for the most part, 99% of the time, that's worked perfectly. But I have found that this one time I did a search, it showed me some notes of didn't quite look right, and I went back through the logs and I found it actually had taken another client's notes and sort of assumed it was in relation to this person that I was actually checking, and I had to go, well, I didn't.
How does Bob know who Marley is?
Yeah, exactly.
Yeah,
But that doesn't make sense.
Yeah, so
associated the two together.
so it's a great tool, but use with care.
But that's where I think, like you said, it's a tool to use, and you can't just use
can't
willy.
rely on it.
You can't rely on it
100%.
100%. It's there as an assistance, but you still need to use your your own sort of intellect to kind of judge what's coming out and know if it's right or wrong, kind of thing.
Definitely agree.
Yeah, I agree with that.
I've actually started using that technique of yours.
Yeah.
I think it's very beneficial, because you can't. I think it'd be easy. I wish we could record our phone calls, but unfortunately, I don't think you're allowed to do that in Australia. But
You
if
have
you're
to
on
just give a
Zoom,
warning if you are.
true.
I believe.
Maybe I need another phone to record myself. But if you put on Zoom and stuff like that, it's like perfect. You can record that whole session, put it into the AI. It will go through the transcription and give you
That's
the
one
overview. That's
one
sick.
area I would like, because I do use Teams and Zooms for meetings, and I do, as I said, the recording aspect's fantastic too, because from a legal point of view, it's much more valuable. I mean, advisors are, despite all the good that many of us do and we try to do, we're a big target for lawsuits as well, which is where file notes sort of came in to being so important. But at the end of the day, at least the old school file notes were basically just your word of what was said in the meeting. I would always try to put, especially key things, if clients sort of had a specific preference, I would say, oh, they told me they wanted to do this, and I put why, so it kind of adds a bit of credibility to it. But you could still easily have someone who said, I didn't say that. And it's very hard to argue against it. So Zoom and Teams has been great for that, because you can have the summary of the meeting, and if it ever came to it, fortunately in my experience, I've never been in the courtroom or anything on a big dispute, but I'd always want to keep it in mind that it could happen one day.
Yeah.
And having a recording obviously was the best way to have that protection. But a lot of the meetings I do are face-to-face, which means that unfortunately the technology doesn't seem to be able to help with that yet. And even if you record it, it's still difficult for the software to figure out who's actually talking. So
I suppose like these, as you say, it is face to face, but a lot of, I suppose, the actual written advice you provide
is in writing.
Exactly. So it sort of helps protect you from that side of things.
Would you, in those face-to-face meetings, kind of have a mic on each person, just say, hey, this is for, I don't know, it sounds a bit odd, I get that, but maybe it could
I've never done that before. I do feel like, from a legal standpoint, that would be a sensible thing to do, so you could, without question, be able to confirm what or what wasn't discussed. And that if anyone ever sort of felt that, they were misled or the wrong thing came up, that you would have, that full proof that, this was said, this was explained.
Pitch in a way that I don't want to make a mistake in what you said, and this is why we're recording it.
Might have to try it one day, but I do feel like it would create a bit of an awkwardness in the meeting.
Yeah, you don't want to ruin that in-person element to it as well.
Exactly. So, people would feel, I do believe that more often than not, you'd have to give clients the choice if they wanted it. I do think most would probably want to decline, or at least feel more comfortable if they didn't have to have it recorded.
Just stick to the written advice and should
be fine. As I said, I think the best way always to protect yourself is just to make sure that clients are making that informed choice, that you get to that point of asking them why they want to do something, why it's important to them, and be able to sort of get them at the end of any sort of key meeting. I always try to get them to sort of try and explain, at least to me or to each other, is a good one too, is what they sort of feel like the purpose is or what's happening. And if they can, as I said, as soon as you try and explain something, it's sort of the best way to confirm or clarify anything that's not understood or understood well. Because if they can't explain it, then you know that, well, we need to go back to this.
Yeah, right. Interesting. Is there anything else you have on your mind that you'd like to?
I think it'll be exciting to catch up with you boys again, maybe in 6-12 months, and
absolutely.
More time to grow. And I'm sure a lot more. I would have learned a lot in that time, and a lot will have changed.
Definitely. Well, anything else?
No, that's it. Well, I'll just say that, what was the name of the business again, just for everybody?
Yeah, so it's Paul Timms from SB Advice, and that's B for Bob, not B. SB
Advice. We'll have the links in the description for anyone who lives on the Gold Coast. And
I recommend that anybody that's thinking about getting advice, that you can reach out to Paul, and as he said, it's a no obligation conversation, so see if you can help.
Yeah, I'd be happy to help.
Well, we appreciate your time. Thank you so much.
Thank you, Paul.
Well, thanks everyone.
Thanks, guys.
And that's it. Bye.